Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, we touched new records. We've come up from those highs, but bulls wouldn't complain at all. Markets are still up around 134 points, just at the 23,400 mark. And midcaps too are doing well today.
Midcap doing well, just as you saw on the screen, it's green across the screen. Midcap index up over 1% at fresh record high. But it's an action-packed show, and let's start the show with the top headlines. Stocks clocked some more gains, led by midcaps ahead of inflation prints and the US Fed meet outcome. Oil and gas, along with PSU banks, are the big gainers, even as realty and FMCG drag.
Camlin Fine Sciences surges in trade as its subsidiary Dresden Quimica enters into a share purchase agreement to acquire 100% stake in Belgium-based Vitafor Invest NV. The cost of acquisition is only €1. Vitafor Group's consolidated debt stood at €6.5 million.
Federal Bank gains after sources tell CNBC-TV18 that former Kotak Mahindra Bank Deputy MD KVS Manian and two Federal Bank executive directors are likely on the CEO candidate list submitted by the bank to the RBI.
Max Healthcare gains after brokerage firm Ambit retains buy with target price of ₹920 a share, says high share of brownfield beds and core markets implies faster ramp up to EBITDA break-even and maturity as well.
Sun TV hits a fresh 52-week high after brokerage Access Capital raises target price on the stock to ₹810 from 600 earlier. The brokerage says company's muted ad growth over FY22 to FY24 is still better than Zee's 4% decline.
Okay, all right. These are the top headlines that we are tracking for you. The markets, where the Nifty is up 147 points right now. The mid-cap is up 1%, and that is the index which continues to outperform yet again. So 1% higher on the mid-cap index. And we do have sectoral movers today in every form possible, actually. Barring Nifty Realty and Nifty FMCG, all the sectoral indices are in the green today. Where Nifty Media is topping the list, the small-cap index is up around 1%. Nifty CPSE continues to see that outperformance. So as Hormaz was pointing out earlier as well, from 4th June, Nifty constituents, all 50 of them have been in the green. And, that dip has been bought and that continues actually.
That's right. Hormaz has been looking at, the entire data, and he's been pointing out the kind of recovery we've seen since the election day counting knock that the indices took. But we have Hormaz. Hormaz, you've been looking at the screens today as well. What are the top movers today?
As much as the recovery is, you always ask for a little more, can you? And the recovery is continuing. The mid-cap index is at a record high in today's session. So the bulls continue to have a good day after last Tuesday's fall. But some of the top movers, as you just highlighted, Max Healthcare, so positive brokerage commentary coming in, 8.5% higher there. LIC Housing is having a good day today. Can't say the same for the parent, but it's 5% higher there. Tata Tele, Trident, Tanla Platforms, all of them having a good day with gains of well over 5% in today's session. As you mentioned, PSUs continue to recover. Concor is up 5.5% as this NMDC, Oil India, Power Grid also seeing some good gains in today's trading session. A sector that is doing well, Media Index is the top sectoral gainer today, and Dish TV is up 11.5% in today's session. Sun TV, some positive brokerage commentary there as well, off the day's high but still up 3%, and Nazara Tech as well, so seeing some good gains in today's session. Some volume buzzers will come up on your screen, and Elcon Engineering continues to surge higher, now at the highest point of the day, 13% higher there. TVS Supply Chain, a new contract for them, but off the day's high, but still up 5%. MMTC and Oracle Financial also seeing some gains in today's session. And lastly, the underperformers of the day, real estate, as Sonal was just pointing out, is the top sectoral loser with Brigade down 3.5%. Marico, APL, Apollo, Sterling and Winsell, all of them seeing losses of just close to 3%. Back to you guys.
Okay, that is a long list, but we have to say the list of gainers is much longer than list of losers today. Thank you, Hormaz, for joining us as always. It's a good time to welcome Ruchit Jain of 5paisa.com for a technical check on the markets. Ruchit, good afternoon. Thank you so much for joining us. Well, we are making new highs every day. Do you think there'll be consolidation on the cards, some pullback from these levels? What are the charts suggesting?
Hi, very good afternoon, Sonal. Very good afternoon, Vivek. Well, we have seen a V-shaped recovery after that last Thursday's correction. And if you look at the broader market's momentum, then it's quite positive. Even the FIS data, who were short of about 13% long short ratio was there, that is covered to about 36-37%. So data is clearly indicating that we might continue this uptrend without any meaningful pullback move. I think many traders are also waiting for some pullback move to enter into the markets. But as of now, it doesn't seem that we will get any such significant price-wise pullback. There may be some consolidations for a couple of trading sessions, which would be a time-wise correction. But I think 23,200 has formed a good support base immediately from a short-term perspective. On the higher side, 23,500 is the first resistance that we are watching out for. And in case if the market takes that out without any pullback move, then 23,900 positionally cannot be ruled out. So 23,900 is the 127% retracement of this recent correction of a couple of sessions which we witnessed during last week. So positionally looking quite bullish. No, don't expect any significant price-wise correction now. 23,200, 23,000, I think the support base has been shifted over there. And we should trade with a positive bias for potential targets of 23,900.
Okay, Richard, so 23,200 is where you're seeing the support at currently. Give us a sense of what are your top individual picks for the day?
So a couple of recommendations at the buy side. First would be definitely an outperformer, LIC Housing Finance. We have seen a good breakout today. Now the good thing is that the breakout has been accompanied by very high volumes compared to its daily average. So usually whenever we see such a high volume based breakout, then a sustainable up move should be expected. One can go long even at current levels, although it's up. So with a stop loss below 685, potential target should be around 760 to 770. And SBI Life is another stock where we have recommended to our clients as well to form long positions. The stock has been a relative underperformer, but I think somewhere the price-wise corrective phase is behind now. The stock today is on the verge of a breakout from a falling trendline resistance. So here SBI Life provides a good risk-reward ratio to take some contra trades after this corrective phase. One can buy with stop loss below 1420 for potential targets around 1520 in the near term.
Okay, all right, Roger, thank you so much for joining us today and giving us those technical updates. Let's slip into a short break now. When we come back, we'll be joined by Ravi Vishwanathan, the Managing Director of TVS Supply Chain Solutions. The company has announced a new contract with Germany's Daimler Truck. Stay tuned for that.
Welcome back to Midcap Radar. Today appears to be a good day as far as housing finance companies and other NBFCs are concerned. In fact, some of the top F&O gainers belong to that particular space itself. So have a look at names like Manappuram Finance, have a look at names like LIC Housing Finance, L&T Finance Holding. These are some, even Indiabulls Housing Finance, Canfin Homes. All of these names today are in the green and they appear to be gaining strength even in the second half of the trading session. But as promised, we have the management of TVS Supply Chain. The stock is buzzing following a 5-year strategic contract that the company has announced with Germany's Daimler Truck. The value of the deal is undisclosed. To discuss demand and the business opportunity, Ravi Vishwanathan, the MD at TVS Supply Chain Solutions, joins us over the phone line. Good afternoon, sir. Thank you so much for joining us. First, could you give us a sense of the total size of this particular deal and which segment are you classifying this particular deal under? Is it part of your network solutions business or is it part of the integrated supply chain vertical?
Hi, good afternoon, and thank you. Firstly, we're very excited to announce the deal with Daimler Truck Southeast Asia. This is really in the integrated supply chain space, and it is to streamline the logistic services between Germany and the Asia-Pacific region for our customer. Of course, Daimler has been a very, very long-standing customer of ours. We have had a relationship with them for over 22 years. But this is a breakthrough because A, it's in a new region, and B, it's in a segment which we believe is a very fast-growing segment for us. I would love to give you the value of the deal, but unfortunately, we have a client confidentiality. But let me just say that it's a 5-year deal. It is for distributing spare parts and related items for the customer, handling over about 8,000 SKUs and about 65,000 order lines annually to over 16 countries in the Asia-Pacific region. So very strategic, very, very key win for us. And it's a reflection of the trust that the customer has placed on TVS Supply Chain Solutions.
Okay, all right. So, Mr. Vishwanathan, while I do understand that you will not be able to disclose that amount since the street is cheering this particular deal that has come by, I wanted to understand if there is any upsize option to this order from the current value of the order, and is it already considered in the order pipeline that you had given earlier of around 4,000 crore rupees, or it will add to that number?
Of course, this deal was part of the 4,000 crores that we had announced earlier during our results. Is there an upside? Absolutely. I think our focus, like I said, is really on the large global accounts and customer penetration, client mining, and be able to offer the three core capabilities across the two segments we have, which is the global freight, the integrated final mile, and the integrated supply chain solutions. All three of these capabilities is what we are positioning with the customer. What is exciting for us in this deal, Sonal, is the fact that most of the technology that has been deployed is our own technology. We've been talking about our strength in the technology in our solutions and in the capabilities that we have built in this sector. So I would say it's very exciting. A lot of opportunities, of course, to deep mine the customer, but that's something which will happen over the course of this engagement and the relationship.
Okay. Could you give us some outlook as far as further types are concerned? We understand that this is one particular deal that you've got from a customer for which you've already been doing work. So any other deals in the pipeline from existing customers where you see visibility in terms of ramp-ups?
I think one of the things that we mentioned after the Q4 results was really about strengthening the order pipeline with large customers. One of the things that we spoke about and we're very, very focused on is to increase the quality of our customer base, which is reflected in the fact that our Fortune 500 customer base expanded from 61 to 78, 61 in FY22 to 78 in FY24. And if you look at the order pipeline of about 4,000 crores, I had said in an earlier interview that we expect to convert at least one large contract in this fiscal year, hopefully, towards the middle of this fiscal year. When I say large contract, we announced a large contract with Sensex last year that was worth close to about 2,000 crores, a multi-year deal. And what that has led is to open the doors for us to participate in these large contracts. So today I can say confidently there are at least a dozen opportunities of not of that magnitude, but of relative magnitude of that large deal. And it really opened the doors for us to participate in such deals. So at this point, let me just say quite a few large opportunities in the pipeline. Many of them would fructify maybe in the 9 to 12 month time frame.
Okay, all right. We get that point, Mr. Vishwanathan. What I wanted to understand is how much will you see in terms of a revenue increase over next 5 years with this deal coming in? And also, is this order spread across 5 years? Is it equal or is it back-ended? Can you give us some more details here?
So it is a 5-year deal with an equal revenue across all of the 5 years. And that's the exciting thing because the opportunity for us to expand that as we progress in the relationship is very, very possible and present. So that's about this particular contract. Yeah, 5-year, constant revenue every year, but opportunity for us to expand it as we go. On your earlier question, if I look at it from a long-term basis, I think the company has had a CAGR of about 17%. Our aim is to continue to grow on that trajectory across all of our geographies. So I think we are pretty bullish about the fact that we will continue on a significant high-teen double-digit revenue growth over the course of maybe the next 3 to 5 years.
So that 10 to 12% or high double-digit growth that you're talking about, mid-double-digit growth that you're talking about, considers this new order as well, I'm assuming. And also, what about margins on this particular project? I just wanted clarification on these 2 points.
So we have stated that the integrated supply chain solutions typically has a margin profile about 9 to 10% or 900 or 1,000 basis points. We can say that the current deal would be around the same range. And from a margin outlook for this fiscal year, we look at about a 50 to 100 basis point expansion across the company. So this will absolutely help in activating that.
Mr. Vishwanathan, one more question. You've spoken about, your FY25 guidance of almost double-digit growth as far as FY25 top line is concerned. Now, coming to the PBT, you ended FY24 for that particular segment at 0.3%, and you're now anticipating and expecting a PBT margin of almost 4% for FY25. So, where do you expect this operating leverage to kick in, and are you on track to achieve it by the end of FY25?
Let me just say, I think the 4% PBT is a long-term outlook, not for FY25. As far as PBT is concerned, what we are telling the market is that we've had probably a difficult FY24. The first two quarters was the negative. The third quarter, we just about came into the black. And the fourth quarter, we finished with about 5.4 crores of PBT. What we are saying is that we expect a double-digit PBT in every quarter going forward, and we want to get to a target 4% PBT by about FY27. And the levers that we have really is the large relationship we have. So we believe that there is opportunity for us to expand margins in the large relationship, because we have we can expect non-linear growth, which means for the same overhead we can expect substantial revenue growth. So our leverage is coming on the back of that. The leverage is also coming on the fact that our network solution, most of the network is invested in, so every incremental dollar should give us better margin profile than what we get today. So a combination of that, and of course the significant reduction in debt levels of the company, which means that we are very fit from a balance sheet perspective, and therefore a better PBT going forward.
Okay, all right, Mr. Vishwanathan, thank you so much for joining us today and answering all those questions about the new deal and the outlook going forward on the business as well. That is the word coming in from TVS Supply Chain Solutions. The street likes this new deal with Daimler, and the stock is higher by 5%. We'll slip into a break. When we come back, we'll talk more about the markets and put focus on some stock-specific action as well. Stay tuned. Gap radar on CNBC-TV18. Well, while the markets, they have come off from the high. So the Nifty is at 23,371 right now. That's a 100-point gain. The mid-cap index too is off the highs of the day. So that's the picture looking right now for the markets. Couple of stocks from the broader markets. Just wanted to point out Tata Chemicals, because that is off lows, and this has come in after a possibility of a price hike that the company can take as well. So that stock should be on your radar as well. But the other stock that we are tracking closely is Brigade Enterprises. It is doubling down on its presence in the Chennai market. The company will launch a mixed-use development at its recently acquired land bank on Mount Road, with home prices starting at 20,000 rupees per square foot. In an exclusive chat with CNBC-TV18, the company's MD, Pavitra Shankar, told Jyoth Sanith that she expects the Chennai and Hyderabad markets to contribute more to residential sales in the next 5 years. Here's a slice of that conversation.
We are predominantly a Bangalore-based firm. We are about 37 years in business, and a lot of our current presence happens to be in Bangalore. That said, and Mysore. That said, we are developing across Chennai, Hyderabad, Kochi, Trivandrum, some of the smaller cities in South India as well, and also GIFT City. But over the last few years, we've really expanded our footprint in Chennai specifically. So far, we've already done 3 to 5 projects across residential, hotel, office, and a small retail building as well. So true to our I guess what our ethos and our our initial steps as well. We have always been a multi-domain player in real estate, believe in mixed-use developments, and this is how our initial projects have come about. Right. Now our plans for Chennai have expanded dramatically. It will become our second largest market after Bangalore, and we are looking at developments across office, hospitality, and residential, of course, and we'll also be doing a bit of retail.
I want to talk to you a little bit about the location where you will see this investment go in Mount Road, one of Chennai's more iconic landmarks and the arterial road in the city. It also comes just years after you made that big ticket acquisition itself from the TVS group on Mount Road itself. If you could just take me through what kind of potential the project has. I believe 13,000 crore rupees is what you're looking at in terms of fiscal potential from it. But what kind of a development will you see at the project, and what kind of segments will this cater to residential, office? What kind of mix are you looking at as well?
So just on the numbers overall, we are looking at 15 million square feet to develop across all of the segments, that's residential, office and hotel, and the investment for that is around an additional 8,000 crores. That does not include some of the land investments already made. Of that, in the next coming year, we plan to launch a few projects, around 3 million square feet in residential and 1 million in office in the next financial year. Specifically, the project that we're talking about on Mount Road, that per se, the value of that project is more around 1,800 crores. So the 13,000 is for our overall pipeline of residential projects actually. This one specifically is around 1,800 crores from the residential piece alone. So this is a project that is mixed use. It's about 1 million square feet in total. 60% of it, or 0.6 million, will be from residential, the rest of it from office and retail. We'll be launching around 200 apartments. Starting from 3, 4 and 5 bedrooms, which includes penthouses. And we're excited to see how this goes. It's a G plus 38 story building, so it's going to be very iconic in terms of the height, in terms of the location, and definitely in terms of the design as well.
I recently read, Pavitra, that you've earmarked around 1,200 to about 1,500 crore rupees for land acquisitions itself. If you could just take me through what kind of acquisitions you're looking at, what kind of land banks you're looking to procure, and what will the split be between your major markets? Is there a strategy at play, and where are you focusing on?
So we would like Chennai and Hyderabad to take a larger share of our overall portfolio, whether it is residential, office or hotel as well. In the hotel space and retail space will be much more opportunistic. But across the board, I think our markets of focus are basically these. In terms of the land investment, yes, around 1,000 to 1,500 crores is what we're looking at on average. Again, it is really based on the opportunities that come to play. We'll be looking at both joint development as well as outright. So it really kind of depends on what the landowner's preference is. And in terms of how much share we would like, today Bangalore contributes around 90% of the portfolio if you look at last year in terms of residential sales. We would like for that to actually have more contribution from Chennai and Hyderabad in the next 5 years. Maybe Bangalore will come down to around 70 or 65% if we're able to grow at the same kind of success that we've seen so far in Chennai, that we would like to replicate in the other spaces as well.
Well, some interesting perspective coming in from Brigade Enterprises, but that's all the time we have on this edition of Midcap Radar. Your stocks when we return.